Hello, and thank you for listening to this message. Financial year 2026 was another positive year for Zagga. This was achieved through a challenging and constantly changing environment. But what hasn't changed is the way that we've grown. We've maintained our focus on protecting investor capital first and on delivering consistent risk-adjusted returns, which are the principles on which we founded this business almost 10 years ago and to which we remain faithful today. Some highlights for FY 2026. I'm pleased to tell you that we raised over $1.2 billion in new funding and originated just over $1 billion in new loans. Our funds under management grew by 35%, and pleasingly, we became a signatory of the Principles for Responsible Investment, signifying our commitment to ESG and sustainability protocols and practices. Since inception of the business in 2017, we've invested more than $3 billion across 350 loans, all within Eastern Seaboard Australia. We've delivered 250 successful exits, returning more than $1.5 billion to our investors. But most importantly, that growth hasn't come from taking more risk. Our approach to our business remains one of absolute discipline, selectively choosing the loan investments that we write and prioritizing capital preservation above all else. Looking at the broader market during the financial year, we were faced with a range of macroeconomic and geopolitical factors, the details of which are well known to all of us and which I don't need to go into now, but which presented a number of challenges across the market. That said, we don't see this as a crisis. We see this as the natural part of a cycle. And in cycles such as this and all of the others, the fundamentals matter. How we approach those fundamentals is what helps us to navigate through the crisis. And in our case, it's discipline, patience, and the focus that I've already mentioned. What this does is it also creates an opportunity for those lenders who have strong credit processes and deep origination networks. And as I've explained to you at the beginning of this message, we'd like to believe that we qualify on both of those fronts. We see continued growth in private credit as an asset class. There are a couple of reasons for this. One of those is that institutional investors are continuing to allocate to the class as they look for yield, and as part of that yield, looking for diversification, reliable income, and less reliance on traditional markets. Secondly, the shift towards private credit is being driven by changes in structural factors. As we've mentioned in many of our white papers, our articles, and our presentations, the banks are continuing to step back from private credit, driven by regulatory process and prudential requirements to stay away from some of those loans. The universe of alternative lenders is becoming more sophisticated, and as those lenders increase their sophistication, they're able to increase the nature and sizes of loans which they fund. And of course, we have the ongoing market volatility, which we've just mentioned. What we like to believe is that in uncertain environments such as these, income-generating strategies come to the fore. And as we know, private credit is an income-generating strategy. And we see the trend continuing through FY 2027, where the themes will remain, although we will continue to face headwinds. But in addition to those headwinds, there will also be real opportunity. That opportunity is driven by population growth in Australia, the housing shortage associated with that population growth, which is already well documented, and the continuing demand for credit as liquidity enters the market, as the economy continues to grow, and as the banks pull back. This opportunity is particularly meaningful in New South Wales, and we see this as long-term, given the size and distribution and demographics of the state. For Zagga, success in 2027 means continuing to do the basics well. That means continuing to consistently originate quality investments, continuing to manage them through the cycle, and continuing to stay disciplined, not only in the investments we choose, but in the way that we manage them. To finish, I'd like to make 3 quick points. Firstly, to thank you for your continued trust in, confidence in, and support of Zagga. We truly value and appreciate that. Secondly, to remind you that nothing changes in how we invest. It's all about discipline, risk management, and being consistent. And thirdly, to remind you that we're always available should you want to reach out, whether it's for more information, to query something on a statement, or just for a chat. Once again, thank you for listening, and I look forward to talking to you again soon. Thank you so much for your time.